All right, guys, welcome back. I got some key levels to zero in on the stock market. We'll get into it, do some technical analysis, see what we see, and hopefully we're able to make some trades off of it. So, all right, check it out. NASDAQ futures just chopping sideways really all day today. Nothing. So just this could be just a flagging action. I mean, there's not a whole lot to read into this, but it's just sideways. So we'll watch for that. The level I got is this 10,106, somewhere right around there as the level of resistance. We're just kind of trading below it slightly. But here's something I want you to look at, XLK. So I've started to narrow down on this one a little bit more because it doesn't have Amazon, and given that a lot of people right now think that Amazon is a beneficiary of the stay-at-home orders, I wanted to hone in on this the tech sector without Amazon, kind of throw that out. So QQQ has Amazon, XLK does not have Amazon, and that's why I'm kind of looking at this, because I'm trying to look for when tech, if it's going to break. So here's the level that I see. We've got this. It's about, you could move it down to give it the benefit of the doubt with all these wicks. See all these wicks? 101.70, I would say. And this was just one slight undercut. You can see several reactions, about four that were right around there. So let's just say 101.70. If it breaks that level, then we've got this trend line. I don't believe this trend line. I kind of throw that out. I said so in the previous video. You've only got two reactions, 1 and 2. So it's just two random dots connected. It's not necessarily a clean trend line. I'm just trying to evaluate that. And, the trend line might be something like, might be in here, might have even been right here. We might have broke and the uptrend and it's been back testing. That's possible. But the thing to hone in on right now is this 101.70. And if we break that, that should send us lower. And the way I'm looking at that is through the SPY, the way to trade it. So the SPY has been weaker than the tech sector. So if tech breaks, I expect potentially the SPY to still be weaker than tech until that changes. Eventually they'll throw out if there's a big sell-off, they're going to throw out the tech sector and it'll start it'll start selling off more than SPY, and we'll pay attention to that. Maybe there's an opportunity to flip shorts or something. But for now, the SPY short, our sell signal up here in the island cluster top is still intact. And it looks to me, it looks like we're flagging right here. Looks like we're kind of doing this little flagging pattern. So, if this flag does play out as, it's kind of like a pennant or a triangle or something, but if it breaks to the downside, then the next target that I see is right down here at this 296.50. That's basically the low that we just reached right here. And I think that probably corresponds with, back here with some levels. So that's the next level that will probably find some support, and we'll just evaluate things as it goes. But for now, and that would be the second test. So perhaps, they hold, it holds support here and then moves higher and fills the gap. That's completely possible. Or we just break down and start the bear market resumes essentially. I'm still trading this as if it's a bear market. The reason why is, SPY has not recovered all-time new highs. Russell 2000 hasn't made all-time new highs. Financial sector hasn't made all-time new highs. There's a lot of sectors that essentially have not made all-time new highs, and the stock market in general, which is the S&P 500, hasn't. The only thing that's made all-time new highs is essentially 5 stocks, and that's FANG. So it's important to, understand the difference between 5 stocks of FANG and the market. And eventually, if the market sells off, FANG's going to get sold too. FANG stocks are indexed. So if the S&P 500 sells off, they have to sell FANG. And there's nothing about it. It doesn't really matter if the companies are strong, they'll get sold with the index. So it's important to watch the index. And just going back to this XLK, you can see today it came down, tagged that 101.70 75 or whatever, and held support. So it, still, that's bullish if you want to read into it that way for the short term. Can't spin that any way but bullish. It's still holding. It has not broken. So what I'm saying that I'm expecting a bearish move, it's just, doesn't mean we have the trigger. I'm looking for it. It doesn't mean that all of a sudden, everything's going to break down. It just means that I'm waiting for it and looking for it to happen. It might come in the form of a gap down. It might never come. Until we see something there and we see this tech breakdown, I don't expect SPY to break down too much. So we might flag out and then break down, or we could run up and tag resistance in the SPY. I have it at 308. I was looking at this, it could be moved down to about maybe right there, 307.50 or somewhere right in there. It's basically 307 to 308, and we could overshoot it slightly. So if we break out of this flag to the upside, then I'd expect to tag that 307, and then maybe we break down. But in general, if we don't break down here, you will see we will have made a higher low. So here's your low right here. Here's your higher low, and that's not necessarily bearish. So have to watch for that to see what plays out. What we're looking for is breakdowns across the board in tech, and we just wait for them. If we don't get them, then this short trade might be short-lived, and this sell signal might be negated. So we have to watch for that. So resistance at 307, we'll say 307.50. Support on the SPY at 296.50. Those are the levels to watch, and we're kind of right in the middle, flagging out. So it's going to break one way or the other. And we watch the XLK for cues or clues on maybe where that's going to break. Okay, let's look at XLV. You can see it's just consolidating sideways. This has been coiling for some time, so I expect there's going to be a big move up or down. I'm anticipating it's down just given the nature of the SPY and some of the larger time frame chart patterns, but we need to see it break. And right now we're just consolidating near support, so that could break. But you can see right here we consolidated near support in the past and spread, kind of bounced up. So doesn't mean that we're going to break. What I'm doing is waiting for the break of this 96.70, and when we get that break, then that would be your sell signal or your short entry. If we're going to get it, I suspect it'll come in the form of a gap down, and it'll trap all this bullish money, or anybody who was long in this consolidation period will get trapped. They'll start squeezing it, and then it will create a big move down. But again, this could go up. But as of right now, we're on support, so it's up to the bulls to hold this support as of right now. If they don't and it breaks, we'll watch for this to the downside. So lots of coiled trades here. Could be a good move when and if we get that signal. Okay, let's look at financials. XLF. That's, I think, some of the reason why the market's kind of holding up today and had somewhat of a reversal to the upside. And that's because financials hit support and they held. So here's the trend line that I had. You got going down to these March lows. You had a reaction right here. The reason why I didn't really see this as a trade or anything is because I only had 2 data points, and I could have marked it any way I wanted. I could have marked it up like here. So the benefit, I could mark it down here and say we're not at support, but what I did is I had it right there, and we came in and had a reaction. So what I would do is probably just, move it around right to there. So now we have an actual trend line to trade against. We have 3 reactions, 1, 2, 3. We can start to trade against this. So if we break to the downside, then, then that's bearish. If we hold and we start to move up, that's bullish. We could easily move up to the top of the trend. Again, the top, though, I only have 2. So I don't know where the top is yet either within this price channel. So I just have this marked out as a potential, these 2 up here, but it's not necessarily a guaranteed. Now, if you look here, you can see on the financials, you see this hourly candle right here? See how it dipped below and you had the wick and then it recovered? So I put my trend line right there at the body, saying that was going to be where the potential trend line is. And today, that's exactly where it stopped cold at and held. So, bullish in general that it held support. So we have to watch for that. This could want to move a little higher, have a little bounce. And so that is a possibility. The area to look at this would be, if you'd want to entry, I mean, at this point, because it held the support, I would be looking for long trades in the financials, and I would be looking for, to buy on support until that broke. The problem is that the S&P 500 has a sell signal with this island top reversal. So I don't want to be anything long while there's this island top reversal candle and pattern in place, which could signal a complete reversal and a move down. So that's what's making me hold off on wanting to buy the financials, is because the broader market has a reversal pattern that's in play. If that reversal pattern gets negated or traded through, then that would be pretty bullish, because that would be another false sell signal, another false breakdown. There's been a lot of them in this rally, and that would be another one. And then that would, in general, that would be very bullish. The shorts would see that, they'd scramble out, and the bulls would win this battle again. So that's something to watch for. Just want to point that out on XLF. Let's look at some trade ideas. Walmart continues to work. Here's the, I pointed this out in the video yesterday. There's your resistance, 121.25. We're below that, and we had a false breakout above it right here, trading below it. So continues to work. It's not impulsive. I mean, this is Walmart. It's a big, heavy stock. It doesn't trade. You're not going to have huge days. I think a 5% day is pretty huge for Walmart. So that might be about as big as you get. But this is continuing to work its way lower. So we'll just stick with the trade there, looking for the support trend line of this bearish rising wedge, and then we'll watch and see what we got going on once we get down there. If we get down there, of course. Let's look at Apple. Apple, nothing bearish. So here's your support line right here, just moving, kind of grinding higher. Not really impulsively, but we'll see, because it's continuing to move up. So in general, I don't see anything bearish in this chart. I don't see anything, and that's worth fading. But this is kind of what gives me pause on the short trade for the SPY, is the fact that Apple and Microsoft still holding their uptrend. So as long as these continue to hold their uptrend, the SPY is not going down that much, and that's why we're seeing kind of this flagging action right now in the SPY. So there's a battle going on. If we get a breakdown in Apple and Microsoft, then perhaps that will trigger the sell signal in some of the other indices. That might have to wait till earnings. They might just try to grind this thing sideways until we see earnings come out, and then maybe there's a big miss. I mean, earnings are expected to be bad, but the way they're trying to play it is they're going to be bad, but they'll try to be less bad, and then the market will see that as good. I know it's kind of backwards, but that's just how it works. But the earnings might just come out as bad. And if they come out as worse than expected and they're not better than expected, expect a big move down as the tech sector reprices for recession, because the tech sector has not repriced for recession. Apple is near all-time highs. Tech sector is making new all-time highs just the other day. So it is not priced for recession, where a lot of the other indices like Russell and whatnot are pricing for recession, oil, all kinds of stuff. So that's what we're looking for, is a repricing of tech to price for recession. And I'm going to try to be catching that move when that repricing happens, if it happens, of course. Okay, here's DraftKings. Look at this sneaky little devil here. You've got support right here at 35.36. You can see this hour right here. We closed below it. So at that moment, everything looked bearish. Looked pretty bearish. But the next hour, we recovered it. So I'm probably going to close this trade for now, just to see and kind of to watch it and see if there's a better entry. But, this one's profitable for me. like I said, I got short right here at my trend line adjusted, but I got short right about here at 40. It was about 40.68 is where I got short. I originally got short here on the breakdown, but remember when I said that I saw it starting to pop up higher, I closed my short and reestablished it up here. So I got short right up here, and this trade's profitable about, as of right now, 12.5%, we'll say. So probably going to close that one and wait and see, because I don't like this recovery action right here, and it's a profitable trade. So that's probably going to be that one for now. Redfin. This one, I've got a couple trend lines. So here's your big uptrend line going back on the hourly chart. Big uptrend line right there. And then we made the secondary uptrend line. You'll see these a lot of the time when you get breakdowns of a major trend. It'll start a brand new trend. And so this one, here's your secondary trend line. It broke that. We did a back test, and now it looks like it's going to start to roll over. And that's what it looks like to me. It looks like it's start to roll over. Someone asked me in a comment if I use like MACD, the moving average, convergence, divergence, and the RSI, and I do. I use this PPO, but it's basically the same as the MACD, and I use it to just give me an idea of when an inflection point might take place. So RSI, what I look for is, overbought. So what you want to do is go back and look, like in this stock, you look, okay, when does this stock get overbought? When does it start to have the momentum, where it's just too overbought? And this one, you can see it's up around 84. So this is clearly a momentum stock, and when it gets up in that level, it starts to become, here's another level of overbought. So once it starts to get up in that high 84 area, then you start to look for a change in trend. And so I just use that as a cue to tell me to start to look for something. And then typically what I'll do is look at my trend lines and look for a break of support, wherever that support might be. So when you have overbought and then you get the break of support, then you're overbought and there's no support because it was broken, and that's the area that you potentially, would short something at. You can use it for long as well, and you just do it the opposite. If you're really oversold and then you look for a break of resistance, and that would be your cue to go long. So that's kind of how I use RSI. The other way you can use it is looking for loss in momentum. So to give you an idea, like on the daily chart, we have a divergence, and what you look for here is just a lower high of these peaks. So like on the daily, you can see here's a peak, and then we made a lower peak right here, and then you want that to correspond with price usually. So you want price to be making a higher high while the momentum, or the RSI, is diverging and making a lower high. So one price is going in one direction and momentum is going in the other. That's divergence. And when you start to see divergence, things usually come back together. Those divergences at some point converge back together, either through price or momentum picks up and you burn through like a negative divergence. So Redfin, we have negative divergence right here, because you can see we made a peak right here, and then on this last move up higher, we made a lower peak in the RSI. So negative divergence, and we have, certain things are at work. Not as overbought as it can be, so we're watching for that and looking for a breakdown in some support lines. So probably this 37, it would be a good area where this could, if this breaks support, that's where it held before, and that was the previous high right here. So it bounced off, held that, moved higher to make a divergent high, and if it comes back down and breaks that support, then I'd expect that will probably set this thing in motion for a move down. So watching for that. All right, let's flip over to some gold and gold miners, and we need to kind of key in on these. I'm seeing signs and hearing things about inflation picking up or potential inflation coming, which makes sense because of all the money printing that we've done. If we don't get a big deflation event and we see, and we don't see maybe stock prices completely collapse, maybe they just grind lower over time. that will be deflationary, but at the same time, they've done so much money printing that there might be inflation. And I know everyone's probably seen the grocery store prices. It's not just meat that has increased prices. Also, just groceries in general, prices have gone up. So watch for that. And, there might be kind of, they're saying stagflation basically, where you have decreased economic activity and you have increasing prices. And that might be that might actually play out where interest rates rise even though the economy continues to stagnate and do bad. So if that happens, there could be some real problems, and gold would be the way to most likely play that. And so we watch these gold miners. So here's let's look at Barrick Gold here. Barrick Gold, so we've got a clear uptrend line now. And I'm looking for this to come down and tag this support line for, to add to the position. I don't own Barrick right now. I am looking probably to get into it right here at a tag of support. And you can also see that we've got this shelf right here, right there. You can see where it held as resistance. We broke above. So if we come down and tag this, that's a great entry, I think. I'll probably look to be taking a position there, and that's around, it depends on when it gets there, but it's around $25. So 50 cents lower. Here's the other one that I'm looking at that I'm interested in, AEM, Agnico Eagle. This one you can see we flagged out. So here's your bull flag. Here's the flagpole. And then we made this big flag here, and it wasn't a clean trend line, but we'll just say it's maybe something like that. Flag here, we broke to the upside of this resistance line, which was a very clean, and we broke it with a gap too, so that's impulsive. So that's what you want to see when confirming a breakout above a level. And you can see that there was volume there too. If I go to the daily, I will probably see the volume a little clearer. See that right there? Right. Well, there was volume here moving up, and then the next day the breakout, not as much volume. So can't say that was a confirmation around the breakout volume. So I guess that's probably why we're coming back in, and you can see we're coming back down. So what I'm looking for is probably to take a position on a back test of this. So $58, depending on when we actually get there. But I'm looking for that. Looking to take a position there, and so we'll watch that. A lot of the reason why the market's been moving higher is because the dollar has been moving lower. And this is the goal of the Fed. You do need to understand that. The goal of the Fed is to decrease the purchasing power or value of the dollar against everything, other currencies, as well as commodities and other hard assets. And that's why they've been doing all the money printing. They're essentially trying to inflate the dollar by reducing the value of the dollar so that debts can be paid off essentially and serviced. It takes more dollars to pay the debts, but the dollar's not going to be worth as much. So that's essentially how they're doing it, or trying to at least. And so the dollar has been selling off here. Just an impulsive move. But we're just flagging out right here. So this is your flagging pattern. And this is why, gold could be ready for another move higher once this flag breaks. If we break this flag, we've got major support right down here at 95.24. I'm using the DXY as my indice to watch. And basically, here's your long-term support. This goes back to 2011, but you can see we've held this uptrend line, for all this time. If we break this, that sets the dollar in motion for a big down move, and that will be, that's probably not going to reverse anytime soon. That's going to be a major trend change, and we'll watch for that, because if that takes place, then we should, stocks could continue higher because the dollar is losing a lot of value, but for sure gold will benefit and gold miners will benefit. So that's why I'm constantly watching whether the market wants to deflate or inflate. And there's different ways to play that, but shorting is playing the deflation side of things, and gold miners is playing the inflation side of things. So it's a little unknown at this point which way it's going to go, and we have to keep watching for signs that tell us which way to play it. So we'll watch this. Okay, guys, this video has been long enough. Leave me some trade ideas down below or some stocks you'd like me to look at, and I'll try to put those into some future videos. And leave me a thumbs up. I appreciate it. Thanks.